Hello, everyone. We're recording this Market Insights webinar on Friday, November 18th, because as you can see, Ian is on the road. He's traveling this week. So how are you doing, Ian? How are things out there?
I'm great, Amber. I'm up here in New York City where the weather is about 60 degrees colder than it is in Florida.
Okay.
And meeting with a group of futurists and investors. We're talking about some of the biggest developments in artificial intelligence, blockchain, genetics. So we had a great day yesterday. We've got a full day of meetings today as well.
Okay.
And, I hope that we can come up with some actionable investment ideas from the last couple of days.
Oh, that would be outstanding, Ian. We are waiting on pins and needles for what you bring to the table. So, Ian, speaking of AI and 5G, everything futuristic, for my segment this morning, I like to actually focus on what's happening in the chip sector. Because as you know, I get up in the morning, I'm scouring through Bloomberg and finding all kind of really great information that I want to share with everyone. So as Bloomberg actually points out, quote, things have gotten so bad for semiconductor companies this year that Wall Street is starting to think there's nowhere else to go for their shares but go up. Nothing but to go up, end quote. So CitiGroup, Wells Fargo are actually predicting that the bottom is near or already here for companies like Micron, while NVIDIA actually has indicated its growth is poised to reaccelerate as demand remains strong for artificial intelligence as well as data center chips. And Applied Materials, the largest producer of tools that actually make semiconductors, actually reported better than expected forecast for the current quarter. So what does this mean for us? You may wonder, what does this mean for us? Well, checking the Strategic Fortunes Model Portfolio, Ian's monthly research service, we currently hold about three chip stocks, all of which are still in positive territory since their original recommendation. And one of the stocks is Micron, which is showing an open gain of 41%. Now, Credit Suisse believes there has been enough bad news in the chip sector that semiconductors are in a, quote, period of sustained long-term growth with factors such as AI, cloud computing, and automotive all driving growth that's more diversified versus the past, end quote. And Ian, I agree. And the growing EV market and advanced technology and automotive industry is helping this keep this outlook alive and well. Just this morning, Jaguar Land Rover said that it's looking to recruit workers who have been laid off by tech companies like Twitter to fill digital and engineering vacancies. So Jaguar Land Rover actually wants to hire about 800 workers across the United Kingdom, US, Ireland, India, China, and Hungary. The jobs are in areas including autonomous driving, artificial intelligence, electrification, cloud software, data science, and machine learning, which are all heavily reliant on, you guessed it, semiconductor chips. So in short, Jaguar Land Rover said that tech workers that is looking to recruit, they need to have skills that are essential to developing and building the car maker's next generation of electric vehicles. So I just think, yes, we're in a bad spot with some semiconductors now, but the future is bright. So would you agree with that, Ian?
I agree. It's something that we've been discussing. Traditionally, the chip sector moves in cycles. And what happens is you'll have increased demand for chips for 1 or 2 years, and then they'll overproduce chips, and that will lead to a gluttony industry. Then the cost of chips come down, and that hurts chips profits. What we're seeing as we enter the 2020s is that in the age of the Internet of Things, is that we need so many chips that the cycle has gone basically parabolic in terms of how much demand there's needed. Now, one thing I would note, you mentioned the electrification of vehicles, and this has been a central theme in a number of the stocks that we've invested in. An internal combustion engine needs 1,000 chips. An EV needs 3,000 chips. When you get to higher levels of autonomy, you need 5,000 chips. So you're looking at a 5x gain in the number of chips that go into a car as we move from internal combustion engine to EVs to smarter cars. The other thing that I would also note is that there's this cliche that we've talked about, and I've written about it before. Data is the new oil, right? It's like the 21st century, the most important thing is data. You can't have and harness data without chips, right? So it's like, if you were to say, how important is oil? Well, you couldn't have oil in the past without having these large oil exploration companies, and all the tools you need to extract that oil from the ground. This is the same scenario where you can't have data and all the things that we want to do with data without an abundance of chips. The NVIDIA news, I thought, quite frankly, was really interesting, where it said they had a slowdown in gaming, which we kind of expected. A lot of consumers aren't spending money on $2,000 laptops to game anymore. However, their data center business is doing great because we're using more data. Companies are harnessing this data, and everywhere you go on your iPhone, you're constantly accessing more data, whether it be on Google Maps or getting text messages or downloading video. And, this is just further along this thesis. We've been saying the chip cycle is different than it has in the past. Wall Street is finally catching up to what we've been saying for the last 6 months. And I think the chips have bottomed. They did in June. You see the price of AMD way off its lows. NVIDIA is coming back. Those are the two real bellwethers of the sector. And also, Micron as well off its lows as well. So I'm glad that Wall Street is finally catching up to what we've been saying for the last couple of months, Amber.
That's a good thing. Yeah, I'm glad there's that reinforcement in our ideas. Awesome take on that, Ian. So Ian, switching gears, I like to focus back on your crypto market, because I know that's really your wheelhouse in addition to what you already know. So what's new with FTX? Anything else we need to be worried about? And Coinbase, that's another question. Is that
yeah, this is just, there's new developments every day. Okay, so the bottom line is FTX did not have proper regulatory controls in place in the company. They had terrible risk management. They built one of the largest crypto exchanges in the world. And when everything happened earlier this summer with Luna, there were a number of crypto lenders and hedge funds that blew up. And it seems like what FTX did was they took customer funds to patch a hole in a hedge fund that they also operate called Alameda Research. This is a big no-no, and I think this is probably going to land Sam Bankman-Fried in jail for doing something like this. The way I think about it is, I don't know if you remember way back in the day in the telecom markets, back at the turn of the century, there was a company called WorldCom, and I actually worked on a debt deal for WorldCom when I was at Salomon Brothers and Citibank, where this company was really the darling of the telecom industry. They were laying optic fiber all around the country. We did a debt offering for them. I believe it was a $10 billion 5-year offering, which at the time was the largest bond offering in the history of the corporate bond market. And it turned out a couple of years down the road that the chairman, Bernie Ebbers, was engaging in accounting fraud, and he wound up going to jail. That did not stop the telecom market. Enron, which is a similar situation to FTX, engaged in massive accounting fraud. That did not stop the energy trading market. FTX was a major player in the crypto industry, but its failure will not stop this technology, because it actually makes the case that, number one, we need more regulation. So I think you're going to see an acceleration of regulation coming in this industry, which is going to be good in the sense that there are institutions that really want to invest in the space, but they need Congress to set out the guidelines by which they can invest before they feel comfortable dipping their toes in the water. So I think that is the silver lining. The other thing is, everyone's worried about Coinbase now. Coinbase is the highest regulated crypto exchange, okay? And they are completely transparent. If you look at their financial results from last quarter, they will tell you exactly how much customer deposits they have. They're a public company, so the reporting requirements are a lot different. And that's not saying that, no public company has ever engaged in fraud, because it's happened before, although the auditing requirements are much more stringent after Enron and after WorldCom. But the last thing I want to say about Coinbase is that the problem that a lot of these crypto exchanges are getting into, which it was BlockFi and Voyager, and now we're hearing, Gemini is having trouble with their Earn platform, was that there was a part of these platforms that you could stake your tokens in, right? You could do this on Gemini, and you could earn a percent reward. Now, where does that percent reward come from? So you could stake your Ethereum, let's say, on the Gemini platform, and they would pay you 6% a year. If you read the terms, they were lending your cryptocurrencies out to market makers, okay? And the market makers were basically buying and selling, trying to make a profit, and then paying you back a percent. Now, because of what's happening with FTX and also what happened earlier in this year, a lot of those market makers have made loans that they don't have the equity to pay back. And so a lot of these earn platforms are stopping withdrawals until they figure out how they can get their money back. Coinbase tried to do an earn platform about a year ago, and the regulators said, no, you can't do this. So they don't have that risk that other platforms have, where they lent out cryptocurrency and they might not get it back. The rates in some of these earn platforms were great when interest rates were at 0. But now that interest rates are back, you get a 2-year bond for 4.5%, you have something that is, I mean, I would like to believe the US government is the safest asset to own, that is paying a pretty significant percentage. So it doesn't make as much sense to an average investor to use these earn platforms anymore. And I would urge anyone, to take a look at your portfolio. And let's say you have a stable coin, a USDC or a Tether, and you're staking it for a 5% yield. Don't do that. If you need a 5% yield on basically effectively cash, go buy a money market account. Go check out the savings yields on some of these banks. They're much more competitive and much safer. But I think at the end of the day, with FTX being removed from the exchange market, it will eventually strengthen Coinbase's position in the cryptocurrency market, and we will have more regulations. But at the end of the day, I think it's just going to be a good thing for Coinbase, because you're removing one of the biggest players in the space right now, because and I know people are leaving Coinbase because they're scared it's another exchange to fall. I think those fears will eventually subside, and Coinbase will be the de facto platform in the crypto space, especially for American investors.
Okay. Well, I appreciate those words of encouragement, especially where Coinbase is concerned, since we do own that in the model portfolio. So Ian, I know that you're traveling, so I don't want to keep you long on your Wi-Fi there, but is there anything else you'd like to add for this week before we sign off?
That's it. Happy Thanksgiving. I also want to say that we practice gratitude in my family, and we go around the table every night to say things that we're grateful for. We get some hysterical answers from my 2-year-old. And I just want to say ahead of Thanksgiving that I am so grateful to my subscribers and viewers and my team here at Banyan Hill. I know it's been a rough year. We've made this through it together, and I know that years ahead are going to be much brighter than what we faced this year.
Oh, that's just beautiful.
So thank you.
Yes, thank you. Thank you, all of our watchers and subscribers. Thank you, Ian and the team. That's beautiful. I appreciate hearing that as well, Ian. Well, I wish you safe travels, and looking forward to seeing you, for me, the week after next, as I'll be out on vacation next week for Thanksgiving. So I wish everyone a beautiful and safe and pleasant Thanksgiving holiday ahead.
Thank you.
Take care, babe. Take care.
Bye.